All right, Scott. So a lot of the investors I've talked to today, they are in on real estate investment, single property, but they're still debating on that question of, is financing right for me? Talk to me a little bit about that.
Well, first of all, it's got to be a little self-serving, right? we're a financing company, right? So we obviously want people to do financing,
Sure.
but appreciate they're not going to do financing if it's not really good for long-term for their portfolio.
Correct.
Everybody gets, Andrea, that if you buy a house today and it pays rent, you pay the expenses, you walk away with the free cash flow.
Not a bad thing.
Okay, but let's say, for example, you're a 45-year-old person and you've got $200,000 in your IRA account. Well, most 45-year-old people can't take that free cash flow and spend it anyway.
Sure,
That's
it's not the point.
Right. That's the last money
Right.
they're going to take, because if they take it, they're going to have, and we don't give tax advice, but that's going to be relatively expensive money to take.
Of course.
So what we really encourage people to do is look at a finance transaction almost like a dividend reinvestment plan.
Okay, explain that to me.
Yeah, so obviously here you've got the same house, but instead of doing all cash where the money comes to you and you spend it, in the case of an IRA, you really wouldn't want it to come to you anyway.
Right.
So we'd rather have that cash flow go to pay the mortgage
Okay.
on your behalf. Because remember, the mortgage is made up of two components, principal and interest. The interest is good for us, and that's why people don't necessarily want the finance transaction. But the principal, that's the renter's money going to your savings account.
I love that.
Right. So the question that we ask somebody when they go to this transaction, let's just keep all numbers linear, right?
Okay.
Do you want to buy one house for $100,000, or using a 50% down payment? Would you rather purchase two homes, putting $50,000 down on each?
I think that's a great question, because I've talked to people today who've literally said that. I have $100,000 to invest. Now, I know that I can do my first investment property with that $100,000. Why should I use bridge finance?
Right. So the value proposition there, where I think the investor, you need to almost look at it on a total return basis. Clearly what's going to happen as soon as you put the loan in place from Bridge or whatever lender, okay, then you're going to have to go pay that financing.
Yes.
All right. So that's a cost.
Gotcha.
So what we're trying to get somebody to understand is, yes, if you look at this on a cash flow basis, as soon as you do this, your cash flow is going to go down. Today. Can't stop that.
Okay.
Because that's the whole purpose of leverage. You're paying us to help you buy two properties.
But that only matters if I'm only concentrating on today.
If you have to pay this month's bills, I don't think this is a good transaction.
But like you said, I'm in my 40s, 50s. I'm not thinking about today. I'm thinking long term.
Right. So let's go longer term.
Okay.
So longer term, let's just say it takes, a lot of the transactions we're doing take, 10, 12 years
Correct.
on average.
Correct.
So let's say somebody
It's
comes.
not that long term, honestly.
Well, let's do it this way. If you're 45 years old, it makes you 57. If it happens to be in a retirement account, as an
Right.
example, you really probably aren't touching the money at that point in time anyway.
Correct.
All right. So what we're trying to get someone to say is, if I can take this $100,000 worth of asset and this $100,000 worth of debt,
Right.
have the renter retire the debt for me.
Love that.
Use
Love that part.
get rich other people's money, right?
Yes.
There's a lot written on that. So what I would have in 10 to 12 years is I would have two fully paid for $100,000 homes.
10 years from now when it matters to me.
Absolutely. So I'm going to have twice the property, okay?
Yep.
Twice the cash flow,
Gotcha.
and twice the upside potential.
Right, because that's what we're doing real estate for, right?
Right. So if you need cash flow today, I think real estate is great. But if you're trying to build wealth so that you can have more assets and more cash flow down the road, then I think the finance transaction, the forego my reward today, let my money compound internally.
Gotcha.
In this case, compound internally in real estate
Gotcha.
is really the equation. So
Okay.
then it comes down to best financing solutions.
Right.
We are a financing solution.
Well, that's a great question, because the people I've talked to today, another thing is a lot of them don't qualify for conventional financing, and they don't want to fill out a bunch of loan applications just to be turned down. Should they talk to Bridge Capital?
Yeah, they absolutely should. All right, so appreciate, unlike a traditional bank, and here I am speaking to you, and I'm sure they're taping it, and someday somebody's going to play the tape. So I don't want to speak
shouldn't make fun of bankers too much.
No, we shouldn't,
All right.
because actually bankers are our friend,
All right, fair
But here's the thing. Banks in general get scared in the market today, and they don't want to lend. Okay,
Right.
so if they actually thought that here's somebody that's got a little credit bruise, or here's somebody that's got too much debt, I don't think I want to lend to them. We don't really take that approach.
Okay.
Our approach is a little bit different. We're not scared of the property.
Right.
We look at both the borrower or the investor,
Sure.
and we look at the property. And what we really try to do is strike a balance. So I would tell an investor, I understand you've got a story, but at the end of the day, if you think your story is compelling enough to lend, it's probably worth telling us the story because we're looking to say yes.
So, but tell me the kind of niches that you're falling in.
We fall into some. We have. Well, first of all, as a private lender, we do a little of everything.
Okay.
But we try not everything can be a custom-made suit.
Right.
So let's look at kind of some of the more common buckets.
Yeah.
Some of the more common buckets that we work in. First of all, 50% of our business comes from international borrowers.
That makes sense.
It makes a lot of sense. Let's say you live in Melbourne, Australia.
Right.
No bank in Melbourne, Australia
Bank of America doesn't want to talk to you.
No wants to lend a property in Dallas, Texas.
Correct.
No bank in Dallas, Texas wants to lend to a bar in Melbourne, Australia.
Correct.
We're comfortable with the transaction. 50% of our business pretty much every month comes from international investors.
Okay.
Self-employed have trouble getting traditional bank financing.
Yeah,
we do
I
a
know
lot
that.
with right. We do a lot with self-employeds. I had when I left the private world to do this. I had trouble. Another place is people that have a lot of assets in their 401ks or self-directed IRAs.
Talk to me about that because I think I've heard a lot of people in this room wanting to know about that.
Well, if you go back, say 2006, 2007, when in this country credit had never been easier,
Right.
banks still weren't lending against self-directed 401ks and IRAs. So I don't know, different parts of the company have different employers. But let's say that you used to work for Wells Fargo.
Correct.
Okay, you might have $200,000 in your 401k plan, but you're no longer working at Wells Fargo.
Right.
So now I got $200,000 that's in my self-directed 401k.
I don't want it in stocks because I've gone through that nausea.
So stocks has been a nauseating ride. The CD market's not going to let that money get
Right.
anywhere
And
for you.
if I'm in this room, I want real estate. So
Right.
how do I use that for real estate?
So you can use those monies to invest in the properties that they locate, and we will allow you to do that.
So you're going to do the same 50% down. So using the same analogy, if I have $100,000 in my self-directed IRA, you're going to lend $100,000, and again, I'm doubling my portfolio.
Andre, when I drive down the street I drive into a neighborhood. Neighborhood's full of houses.
Yeah.
When I pull up in front of 123 Main Street,
Right.
I really don't know whether it was financed with non-IRA dollars or IRA dollars.
So it's the same to Bridge Capital.
It's right. What we really try to do, and I
Right.
think this is part of our secret sauce, and so everybody can decide whether we're just trying to tell a good story
Sure.
or not. But I think that we do an excellent job
Right.
of taking one of our customized products, helping an investor understand what his objectives might be, and matching a financing solution with the property that works. We've been doing this for over 6 years now,
Right.
and I think we're pretty proud to say that we've never had to take a property back,
Absolutely.
and we've had to restructure in this entire time 2 loans.
That's very unique.
Yeah, but I'm saying
That's very unique.
Right. The funny thing, everybody always says, "What happened with the 2?" Okay. They don't ever ask what happened with the 800 successful ones.
Right.
Yeah, what happened to the 2? In the 2, sometimes you just miss, right?
Right.
And what really happened was those properties had an anticipated rent of, say, $1,100 a month.
Right.
When they actually got rented, they sat vacant for a few months because the rent was a little high.
Sure.
So when they finally got rented 6 months later, the borrower was already a little bit behind, and it actually got rented for $975.
Right.
Then it's just a matter of restructuring the loan. We are trying to build our business on investor successes, not investor failures.
Gotcha.
And again, I think that's where our real high-touch, high-communication model works well.
Well, for me to kind of hedge against that, I would want a lot of diversity in my portfolio. So one of the things I like what you're saying is I've got 2 properties instead of 1. One's rented, one's not. That's a little bit of diversity. What about geographic diversity?
Well, we're at a conference today, so I don't think I really want to try to get overly into trying to get investors to look at a lot of markets that aren't
Right.
being represented today. But what has clearly happened is investors don't want all of their real estate in one market.
Right.
We're licensed in 9 markets, and we actually operate in 9 markets in 8 states today.
Great.
And I think one of the things that we're kind of proud of is we use the same methodologies for getting real estate, investors, rehab, property management. We use that same discipline in all of our markets. And for the investors that work with us, and a lot of our clients have been repeat clients, off that same application, we can lend in all those markets. And I think that that's a synergy that a lot of people have migrated to.
Okay.
I would also say, I hadn't gotten a lot of questions on this, but I think one of the things that I would also point out is everybody that starts off using us as an alternative lender or as a private lender says, well, I'm going to pay you off quick, or I think I'm going to be able to get, a bank will pick me up. So one of the things that I would want anybody to know is none of our loans have a prepayment penalty. So at any point in time, if somebody...
Again, that's unique with private lenders, right?
It's actually very unique, because I think a lot of people try to kind of use that as a trap, kind of get you snared in and then tax you to leave. Our theory is we're not going to charge you a penalty to give us our money back, right? So the end game for us is we want to put our principal out, we want to get a return on our principal, and we want to have a client that had a successful investment. So
you're setting up for success in the long run, whether they pay off or not.
My theory is if our investor succeeds, we'll succeed.
So one of the questions that's come out today is you've talked a lot about the team and having the right members of the team. So what does that mean to Bridge Capital? So
the team for us is...
Do you work with just anybody?
No. So I understand the question. I'm just trying to figure out the best way to start to answer it. Most of our borrowers are not in the real estate business on a full-time basis.
Sure.
Okay? Sure. So what's happened is they have a primary job that has created wealth. They're using part of that wealth as an investment.
Right.
Part of that investment is going into real estate.
Correct.
So one of the things that we really try to do is we think you got to lend to a strong team. The joke that I like to say behind closed doors is, if it's a Persian palace, but it's mismanaged, the investor will fail.
I agree. I've done property management and I've done it poorly. So now I pay professionals to do it for me.
Right. So what we look for is much like the people that are providing the property, we call them a wholesaler. Okay. So a typical wholesaler for us is going to be
like a turnkey provider. Is that what you mean?
Turnkey provider, I would say yes, but now you get down to we're kind of a niche industry, you get different people have different definitions, right? So to us, this wholesaler is somebody that has proven that they can find investment properties or find properties at below market or distressed values. Right. Here's the key, though. Right. We're not looking for the smallest amount of rehab so it looks good in a picture. Okay. We're looking for what we will call a non-deferred maintenance rehab. All right, define that. I want that roof to be solid and have 10 years worth of life in it. Not, I think we can get 6 more months. Not pretty in the picture, and that's not real? That's right. I want that hot water tank to be good. I don't want to have to put duct tape on because there's a little rust on the bottom, okay? Same thing with the air conditioning units. Because really, if you have a good roof, good hot water, good heating and air, your big maintenance items are kind of deferred for a while. We also like the wholesaler to have what we say a property management solution that we understand. Yep. So they either own their own property management company or they're closely tied into the property management company.
Worth their weight in gold.
Absolutely. Because nobody that has a vested interest in the management of the property is going to want to start off with a weak property. Correct. Because a weak property has an unhappy owner and an unhappy renter. Right. So what we're looking for, so when we say strong team, we're looking for good acquisition, good rehab, and good management. Because we believe if those 3 things are in place, then the investor who is coming into the space, who's created wealth and wants to buy real estate, is going to have a more or less headache-free experience, and they're going to come back for more.
So then when I've been referred to by Bridge Capital, I can assume that you have vetted the team that I've chosen and you feel that they're providing a quality product.
Well, only because you're seeding the question, right? Because you know the answer. We go into every one of our markets, meet with every one of our wholesalers multiple times each year. So absolutely, and we actually, we add wholesalers, we fire wholesalers, we'll put them in the penalty box. We pay attention to that.
All right, you busted me out. I'm belaboring this point, but the reason is you mentioned the fact that we've been in business for 6 years and have never had to foreclose on one of our investors. If you ask me why, I'd say it's because we make sure we have the right team members and we're very picky about who we work with. So for me, that's an important distinction.
And we care. And, they're giving us the
wrap. And we're setting up the investor for success.
And they're giving us the wrap-up sign. So, I would just tell you in closing, if you have a cash property, and you think you want to leverage it for future properties,
Right.
you really ought to keep us in mind. Or if you're contemplating a cash purchase, but can honestly say you don't need that cash flow today, you really need to contact one of our underwriters and really test drive whether or not one of our lending solutions is ideal for helping you acquire more real estate than you might be initially thinking you want to.
Sounds great.
Thanks.
Thanks.